Now, OpenAI is competing directly with those companies that are buying OpenAI, ChatGPT, selling to their end customers. And so you have a lot of concurrent motions happening between the foundational model companies and the businesses that are built on top of them. And there's a lot of competition.
Eine neue Folge Innovation Pulse. Heute mit einem wirklich spannenden Gast aus dem Silicon Valley, aus dem Bereich Software as a Service. Er hat wirklich einen der eindrucksvollsten Track Records hier aufgebaut und wir werden darüber sprechen, wie KI sein Business, seine Unternehmen beeinflusst, wie er das einschätzt, was passiert da in den nächsten Monaten und Jahren. Er hat wirklich Einblicke, viele frühphasige Investments, haben erfolgreiche IPOs gemacht, ganz viele Namen werdet ihr auch gleich kennen, über die wir sprechen. Und deswegen wechseln wir jetzt ins Englische und ganz viel Spaß bei dieser Folge.
Thank you so much for having me and really appreciate it. I'll start with the Meritech side. We're a late stage growth investor. We've been operating since 1999. Currently manage $5 billion of total AUM, investing across the United States, North America, as well as Europe. In terms of our focus areas, we've been looking at enterprise software for the past 23 years. We were early in companies like Salesforce and NetSuite. Over the past decade or so, we've had many companies that have gone public or have been acquired. I'm sure many of which you've heard of, like NetSuite, Anaplan, Coupa, Tableau, Looker, Snowflake, Datadog, Segment, Auth0. We've been very fortunate to be a part of great companies. As a firm, we're very small. So there's only 6 general partners, and we have 10 people in our investment team. And so we've been a very focused and small group throughout our history. We're currently investing out of our 7th fund. That's a little bit over $1 billion USD fund. And we closed our Fund 8 last year, which is a $1.4 billion fund, which we'll start investing in most likely next year. In terms of the types of companies we invest in, I gave you some examples of names, but we usually partner with companies at the $10 to $50 million revenue mark and help them grow into the hundreds of millions, if not billions. Out of about 240 investments, we've had over 60 IPOs in our history. And so our hit rate there has been very high. And we're always looking for the next best thing. And so excited to chat more about that today. In terms of myself, I started my career as an investment banker at Goldman Sachs in the technology group there, mostly doing IPOs, debt, and M&A for internet and software and semiconductor companies, and have been doing late-stage software investing for over the past 10 years.
Very impressive track record. So we will also link the website and have a great newsletter. So thank you very much today for finding the time, because you are a true industry expert. In your industry, software as a service is basically rewritten. We will dive into this because AI changed the game. It feels a little bit like overnight things have changed. A crazy improvement and an inflection point with OpenAI, but many other technologies. So maybe we start here. So how did you kind of experience this dramatic change in an industry that you have been quite of leading with one of the best investors in the last month and 1.5 years, one can say?
Yeah, I appreciate that. There's a lot to talk about here because this is a very interesting topic and very top of mind for any investor. We, if you think about Meritech, the firm started in cloud software. And so we were actually the first growth investor to invest in Salesforce, which was the first cloud CRM. And at the time, it wasn't even called the cloud, it was called on-demand. And a lot of people were skeptical of on-demand software because that meant you had to put sensitive data out of your servers that you managed in your own physical location. With the advent and the growth of AWS and the launch of that in 2006, when I started over 10 years ago, and when I was helping advising companies in investment banking, you could see the early innings of the cloud adoption happening. The difference in that platform shift versus today in AI is there were a lot of naysayers. I remember going to meet with large companies in 2011, 2012, 2013, and they would tell me, we will never put our applications in the cloud. The cloud is for startups. It's for small companies. We need data regulation. Our data needs to sit on our own physical locations, and we need to manage our own servers. And that was a concept that a lot of legacy companies just failed to even consider, that the cloud was the future. And it left a lot of businesses behind. And if you look at the market today, just the public SaaS market in the US is almost a $2 trillion market that started from zero 20 years ago. And now we have AI that's added that. And I wanted to set that up and talk about AI because the implications of this are dramatic. The idea that you can sell prepackaged software delivered to the cloud in workflow form to end customers at a 30% free cash flow margin is why public software companies trade the way they do, and why investors will pay 10 times forward revenue for a company that is burning money and not generating any profits. Because the beauty of the software model, or the SaaS model, if you run it at DCF, is the value of the company today is the net present value of future cash flows. And AI can disrupt this across every step of the way, as well as add a lot of fuel to the fire on growth too. So if you think about the basic composition of a software company, as I mentioned, you build application workflows, you sell those to your end customer, they're very sticky and they may buy more over time. And these are all subscription agreements. With AI, if the cost to produce software is dramatically reduced because engineers and developers are 10, 20, 30x more efficient, where a decade ago, the moat in a software company was you had a very smart founding team, you had very smart engineers and product managers who would build this opinionated workflow software. Well, what if with AI, that interface layer of software is different? You look at what OpenAI has done, whether the new channels are voice or new interactive layers, there's just a lot of disruption happening. So you think about what that's going to do to the market. It's very unknown. We know it's going to be dramatically transformative. The other thing I'd mention is in AI, unlike what I described in the cloud platform shifts, there are no naysayers. Every large incumbent, whether you're Microsoft or IBM or Adobe, the day that OpenAI released ChatGPT to the public, they were eyeing this, and within months, they've been talking about it in their earnings releases, and they've been launching products. You look at
That's quite impressive that the big players did wake up so fast. That was, for me, unexpected. For example, Adobe, Microsoft, truly delivering. And sorry, I have to jump in and say, the thing about, I don't want to put my data in the cloud, that's still a discussion here in Germany. It's crazy, but still some companies discuss whether the cloud is the future. So the US is a little bit more progressive in a good way. And of course, it is the only way, and it can be done in a secure manner through software that's secure. So absolutely the cloud is the future. And you've been, very, very early to the game. So people discussed whether it's the future. And that's still some people are discussing in Germany today. And I hope they will soon understand that the cloud is the future and the only way, and that it is a safe and the best way to go. You also discussed about how AI is changing how you invest and changing how companies are built. So the idea is that for example, software code, which was a huge challenge in the last couple of years, how you can get the coders, because they were high demand and not enough capable people, now changed, because with AI you can code much faster. So it is the hybrid human, it's much faster. But we also see that when it comes to the architecture, for example, if you talk about Zoom, they have a very strong architecture, content delivery network, and that's why they're could scale so fast and so reliable. And this is something we believe, at least, let's discuss, that AI cannot provide today. So it's good for clear defined tasks, but when it's about the great architecture, so how do I build my data foundation? How do I connect the UI and so on? These architectural decisions, I believe, what AI is proposing, at least that's what we see, it doesn't make any sense so far. How do you see the current situation that we're in?
Yeah, I agree. A lot of the companies that we look at today in the startup world in AI, they have amazing demos. The demos that are pre-recorded, if you will. When you go and use the products and you actually look at the workflow that you can do in them, there's a lot of roadblocks and there's a lot of limitations. And I'm not saying that as a disservice to the companies being built. We're just very early in this market transition. We're probably 1, 2, 3 phases away. I suspect it's maybe it's 1 to 3 years where we can actually have intelligent applications built, like you described, from the app layer all the way down to the network layer and infrastructure layer, using AI alone. And right now, a lot of the products that I'm seeing are almost just accelerating human development. And so, like you said, if you have an engineer who can code X lines of code in X hours, they're enabling that person to be multiples more efficient and code much faster versus coding for them, if that makes sense. And so I think we haven't, in enterprise AI apps today, we haven't gotten through to the area where it's, okay, you can help me do something, you can't yet do something for me. And I think that shift is going to happen. We've seen there's dozens, if not hundreds of companies that have been funded using AI agents at the seed and A stage. I'm very excited about that market where you can have an agent to do your email. You can have an agent to book you travel. You can have an agent to figure out how to think about a market structure of a company. That is what we've not gotten to, which I think over the next few years, we'll see more companies and products launching to do that.
Looking at FSD, fully self-driving, what Tesla is developing. So it's also one of the biggest and most complex AI problems, of course, in the world. But we feel that Tesla is one of the leading AI teams in the world, and they're still struggling to deliver a working product. It's getting closer. It's very, very impressive. But the promise that they made took longer than they thought. And I believe they didn't make a false promise. I believe they believed that they can deliver. And now he said 1 to 3 years, we will have an AI that can really build complex applications like an ERP, a CRM, a mail communication provider, whatever. Are you sure? I mean, I don't know. And I believe for me, it's hard to see where we are. But right now, it feels like to combine things, the AI fails dramatically. So what are you really sure? Say 1 to 3 years, we will have this? This would be amazing. I mean, there would be a major impact.
We'll see the start of it as then. Today, we're looking at, by the way, are demos of products that will do these types of things for you. I think the innovation that's happening around AI at the infrastructure layer and the integration layer is probably one of the most exciting areas. And then you think about where the foundational model companies, OpenAI, Anthropic, Bard, etc., they are slowly building workflow on top of their proprietary models and proprietary data. And so if you're able to combine the infrastructure layer, the proprietary LLM, as well as the workflow building and orchestration layer, you can actually build intelligent apps or intelligent agents. We're not too far away from that. For very simple use cases, some of those things exist today. Do I believe that someone is going to be able to build an ERP system akin to NetSuite or Oracle in the next 1 to 3 years? No way. But what could happen is, could someone build an ERP overlay layer that enables you to do no longer manual accounting, looking at differences in accounting between your different ERP providers that you may have in a large company? I think that is for sure coming. But we won't be in a full intelligent app layer probably for some time after that, but you'll see starts of it coming soon.
Mm-hmm. Jumping into a niche topic, large language models. And the industry discusses whether it's a good idea to invest in large language models or if it becomes a commodity and it's just like who owns the XPUs, whatever these PUs are, the processes. Do you have a clear view, or are you still making up your mind whether you should invest in an LLM?
The market is changing so rapidly, we are not yet sure. And I think that companies like OpenAI and Anthropic have done incredible things in a very short period of time. They're obviously very successful in large companies. No one could argue with that. And they would be very attractive investments at certain levels. With that said, we now have open source models, and we have a lot of innovation happening on the application orchestration layer. Here's the interesting part. OpenAI, I'll give you a case study, and this is public information. A lot of companies were built on top of OpenAI to run ChatGPT, and their entire software products were essentially wrappers around OpenAI, like all these copywriting companies that are offering new copywriting tooling for marketing teams. And now OpenAI is competing directly with those companies that are buying OpenAI ChatGPT, selling to their end customers. And so you have a lot of concurrent motions happening between the foundational model companies and the businesses that are built on top of them. And there's a lot of competition. And so I think it's creating a little bit of a unique situation where one could argue if you are one of the foundational model LLM companies, you could say, well, I want to be full stack. I'm going to build the foundational model in LLM. I'm going to have the orchestration layer, and I'm going to have the app layer, and I'm going to have proprietary data. And that is going to be my competitive moat. Because if all I'm doing is selling an LLM, well, my end customer who's building a software app can basically just tag in and tag out 4 or 5 other LLMs and use whichever one they need.
Yeah. Cheaper, whatever. Yeah.
Just like the cloud providers, AWS
did a good job in logging customers in. AWS, I believe, did a good job.
Yes. So I do think there'll be commoditization, but those businesses are also innovating rapidly above the LLM layer. So I think we'll see both things happen at the same time.
Talking about the UI, I believe if you invested in Framer, if I'm correct, and
that's correct.
That's also about a lot of UI that's automatically generated. How do you see the UI side? Is it also like a large visual model could go over all the great table views, login, registrations, and so on, and then automatically create a great UI? So how do you see this evolving?
Yeah, a company like Framer is giving designers and marketing teams superpowers using AI, where what would take many hours or days to get a fully functioning mobile and web optimized layout ready to go, Framer can do in a matter of minutes with the power of AI.
With chatting?
Yes, with just typing in.
Okay.
So if anyone is looking to build a new website or a marketing page or landing pages, Framer is the best product we have found to do that. And they are utilizing AI. So you could go into their website, type in, I want to create a website for my legal services company that has these attributes, and here's my logo and colors. And boom, literally within a minute or two, you have a fully functioning layout that your designers or marketing team can start adding and writing copy to, and they automatically create and generate all of this. And you can go in and automatically generate elements inside of what they're doing at a very minute detail. So it's very powerful, and there's nothing like that in the market today. And so you think about the disruption of the status quo of having WordPress developers taking weeks and months to just get you a single layout that works on a computer and a phone, to going to framer.com and creating that in 2 or 3 minutes. That is true AI. That is disruption, and that's what AI is enabling.
Crazy. And when we talk about the next interface, or maybe this is the next interface, let's discuss the virtual reality. Apple announced a new product, but there are other like Meta in this industry. What's your view on this? Is it a future important platform? Will it be an important interface? Or do you say, this will never become really important, especially in the business context?
I would have said, if you looked at the rise of Oculus, and then that was almost a decade ago, Facebook acquired them. They couldn't get enough developers really around the platform to innovate on top of it. And so the platform did kind of die out. It's been revitalized. I think now with Apple coming into the market with a new product, as well as the infrastructure and the app store that Apple and the developer that Apple already has in their ecosystem, this may be the moment that it finally works. There is no doubt there are massive both consumer use cases, whether it's around entertainment, gaming, etc., as well as massive enterprise use cases around manufacturing, around all of these different areas in the economy where this technology can be utilized. So I think it's real. We haven't seen the real form factors exist to be relevant in the enterprise yet. Consumers, there's been early adopters, but this is going to be an important channel. And I suspect, like I said, with the rise of with Apple getting into this market, it's gonna increase the adoption dramatically.
Very, very interesting times where a lot of new technology will kind of explode in a positive way, new possibilities. On the other hand, our industry has seen a compression in multiples, so in valuations. We have seen it in the public market and the private market. When you look at the bigger picture, what we just discussed, it doesn't make too much sense to me because the innovation is now starting and there's a lot of value created. And you are writing great reports, so highly recommended from Meritech. So what's your current view on this valuation compression, and especially looking at a public versus private market? So how do you see the valuation environment?
I'll talk about the public markets first. We have seen an unprecedented drop in multiples across the board. We went from a market where there was zero interest rates, it was grow at all costs, and companies actually traded higher the faster they grew and the more money they burned. You would be more valuable in the public markets. That same mindset, the private markets just really follows what the public markets is doing because that is the ultimate exit opportunity. That shifted dramatically as interest rates started to rise. And I think everyone in the industry underestimated the impact that higher interest rates would have on software multiples. And so what happened? We saw multiples crash. Then we saw demand soften. So customers who wanted to buy your product were taking longer. They weren't buying as much. And we saw, we're still seeing a ton of layoffs across the industry. So the worst factors to hit the public software markets and public tech markets broadly happened at the same time, with multiple compression as well as reduced demand for their products and services. And so we've seen companies come down 60, 70, 80, even 90% from their multiple highs. And there's been $1 trillion or more lost in value destruction based on multiple compression. We have been at a relative trough the past 4 to 6 months or so. And if you're a software company, the reality is now a best-in-class business, you will be worth maybe 10 to 15 times your forward revenue estimates. During the boom times of 2021, you were worth 100 times. And so that the monetary environment that would enable 100 times revenue multiples will not likely exist, if ever, or for many, many years. And so private companies are having to adapt to this new reality as well. They have slower revenue growth, they're worth less, and demand has softened for their products. Therefore, what have they had to do? Unfortunately, there's also been a lot of layoffs in the private technology sector as well. And there's no IPOs and there's very little M&A. And so liquidity is scarce. And so it's the same factors that have hit the public markets have hit the private markets. I suspect that with rates stabilizing, hopefully, at least in the US and possibly Europe, we will, or maybe coming down again, we could see some relief, but it's unclear right now. It's still a very challenging market environment.
What we see in our software as service companies is that in the last 2 months, the revenues have picked up again. So it was really kind of a strange series to sell software as service. So in the last 2 months, at least in our portfolio, we see a pickup. Also, when you look at the growth, I believe if you're unleashing AI in a smart way and really like Framer, what you just mentioned, delivering a crazy amount of value and save so much time, I believe there are a couple of companies that can also see great growth rates again, especially if you have a little bit better environment. So very, very interesting times. Will we go to 100 times sales? No, I believe that's that we'll never see again. But
one interesting thing I want to mention on public software, there are 0 companies in the public SaaS market that expect to grow their forward revenue greater than 30%. So thinking about that just goes to show how soft the demand is for products. When companies were growing at 70, 80, 90% on forward revenue estimates during 2021.
That's right. And if you look at the multiples currently, I believe there will be a little bit better in the future because all of the value. But let's see. So wrapping up about maybe you have a recommendation of a book or a podcast or something that you say, if you are in that industry, that's really an interesting information source.
I would suggest, selfishly, Meritech-Capital.com. We have a lot of publicly available data on there around the software industry. But another one, and I'm sure many of your listeners have also aware of it, but the All In podcast does a great job encapsulating what's going on in the venture and technology community as well. So I'd highly recommend it.
In general, I agree. In the last episodes, they have a little bit to talk too much about big boats and what they do.
That's true. Yes.
Entertainment part. And I'm looking forward to the conference. We'll join the besties over there. But yeah, so stick more to the business and less about the big boats and expensive wines. But in general, a great podcast. Alex, thank you so much. A truly great deep dive into the software as a service industry, how AI will disrupt and change things. Truly appreciate it. You find the time. You've seen so much and invested in so many great companies. And really great catching up, learning about the current changes, and hope to talk to you soon. Bye-bye.